Alrighty team, welcome to today's stream. We are doing a slightly different format today where I will just be recording as YouTube decided to play up on us on the YouTube live. So I have a bit of an agenda to run you guys through and girls through today. We'll be talking about a few of our favorite cryptos, of course. We've got some Forex, we've got some stocks, we've got some news in the form of tariffs potentially, and we're going to talk a little bit about trade management too with the stop losses and trailing. So without any further ado, since we have a fair bit to go through, let's get cracking. First of all, we always start with our market indicators, right? It's like taking the temperature, or making sure the car's got oil, and you do all those things before you start driving. So we can see the dollar has started to reverse in a level that we talked about last couple of streams, was this 50 to 618 on a daily percentage, a possible reversal. We know that deeper pullbacks, of course, indicate a weaker bullish trend, but in this case there is a fair bit of news, and we'll talk about it later, that just come out, and we said this was likely a point of reversal. This is what we're seeing now. Dollar is facing this, you can see this last institutional candle, about 50% of this down move. We've got a bit of potential selling pressure coming up real soon here, which may conveniently come today with the news later on. If not, if this level fails to reverse, we'll likely see the dollar coming further up, likely into towards the 100. Okay, so something to keep an eye on. Nothing too scary there, but good to know that we are at potential reversal levels there on the dollar. Similarly, on BTC dominance, our favorite market gauge for crypto, of course, we can see this this sideways movement, which we have hoped for quite some time, that would finally break down, and it's just chopping. Okay, so once we see, excuse me, closing below 59%, we can then have a better understanding that the trend is weakening, and of course we are moving into bearish price action. This kind of close that we have tented here could potentially be seen as a break of structure. And you can see there, this was the previous low, high, low, and potentially we are tempting, but it's not really convincing, and we really want to see this level here as a BOS. So this is the BOS that I want to see down here once we go into that 58 or thereabouts, 59 there. Okay, so keeping an eye on DXY as well as BTC dominance. Now, let's take a look at the actual pair. So Bitcoin is somewhat similar to the dominance in the sense that we have been ranging and creating what? When we range, if you guys were live here with me right now, you will know the answer. We are creating liquidity. Okay, so equal highs, of course, and down here we also have liquidity. On the downside, we are fairly close to we were fairly close to taking out that liquidity, but in reality we just bounced right back down, which leads me to believe we will likely do some sort of fake out, grab liquidity down first and then grab liquidity up. So there's nothing appealing in terms of this price action for me in Bitcoin. If we are literally, you just section off, and I'll show you guys and girls. So we just take this price action right here. We just focus on, since November to now, we've just been ranging between 94 and 83. We are literally in kind of like in the middle of this range right now. See? So we tapped the 50%, we reversed. So now we're likely going to come back into that 50%. So we're in the middle of a range. There's nothing there for me that entices me to obviously buy in the middle of a range because we could go lower, or sell in the middle of the range because we could actually bounce back. So that 50% area, not my favorite. Lower time frame on 4 hour, you can see that we are likely going to come and retest all this volume down here, which was another micro range within the larger range. This is why it's so important to understand time frame. This was the chop on the daily. This is the chop on the 4 hour. Okay, we're obviously taking out upside liquidity. These were the equal highs right here, and I'll draw them out for you. We've taken out all this 4 hour liquidity, and this is called inner liquidity, right? Because this is the external liquidity, this is internal liquidity. We've taken it out, and now we will likely come back and retest some of this volume down here. So I expect some more chop coming up soon. Now you could say, oh, since we, if we're going to come back down here, should we short now? I personally don't like to do that, because we can easily spike here, somewhere here with the upcoming news. It's going to be a volatile day or so, in my opinion, with tariffs, and we'll talk about it in a second. But look, on Bitcoin, basically, what I want to convey to you guys and girls is there's nothing there for me that really screams out. I do have a level down here, which I like for a potential reversal. And it's this daily candle right here. You can see that daily candle, boom, that is the last pushed down before the move up, but it is quite far away still. So nothing there yet. That candle also, it is on a daily. So we would like to obviously seeing if there is a better entry, such as 15 minutes right here, that potentially could give us a much better risk to reward. So something like that will be a little bit nicer. Okay, so nothing there. Feel free to delete. I'll delete this just for confusion, because we are quite far away. We're not going to set up limit order just yet, but what you can do is simply highlight your levels of liquidity, grab an alert, and that way when market does decide to come and tap it, you'll get notified, and we can start looking for reversal levels. So Bitcoin, nothing exciting. Let's take a look at ETH. ETH has very, very unknowingly missed our 4 hour area by not very much, by about $20. So you can see we had this. Let me take it on the daily first, so we can see. First of all, we'll be discussing the last couple of weeks how ETH has been showing more strength compared to, for example, Solana and Bitcoin. What I mean by that is that it didn't actually come back all the way to a 76. You can see this was the low, this was the high. It stopped somewhat in the 56.18 area, so therefore showing more strength. But you can see there is also somewhat a chop here forming. We looked at this area for a short, and then what we did, of course, because this is not a very nice candle, this is a doji, we wanted to take a better risk reward, as we do. And this is what you do as a trader, right? You're not going to catch them all, but you got to catch the best risk reward. So this was the 4 hour candle that we were interested in right here, this last push up before the down, and unfortunately, it didn't work. It didn't work in the sense that we had the levels being reversed slightly earlier than anticipated. That's okay. We can't catch them all. But now what's important to see, of course, is we will likely see Ethereum coming back just like Bitcoin in some of this volume and some of this volume. So patience, patience, patience. There is a couple of really nice candles on Ethereum that have been mitigated before. You can see this one and this one, so that would have been nice candles to play off, but unfortunately they have been already tapped, therefore mitigated, and I'm not going to play off of them again. On the 1 hour, we do have this specific area which I was looking at yesterday, which may give us some sort of potential reversal. So you can see last push down, big engulfing back up, another push down, and another push back up. So this area is something that potentially may give us a bit of a reaction when we come back down there, which, as you can see, we are still a little bit far away. Okay, so this is at 2,829 thereabouts. Call it between 2.8 and 2.30. So somewhere in their vicinity. This would also be a nice level to come and grab all of this liquidity, which is internal liquidity right there, and we'll likely also see at somewhat of a nice fib level at the AA6. You can see right there, sitting at the AA6. So I do like this for Ethereum potentially, buying off of that 1 hour candle, stop loss somewhere there, and then we'll just drag it across, drag. So this will be potentially my my play for Ethereum, something like this. Okay, obviously we would have take profit along the way up, but yeah, I don't mind this for an Ethereum setup. Okay, so we've got one setup that we're eyeing at the moment for a potential reversal. The next pair we're going to look at is Solana. We called out this short and it ran pretty much to TP. Okay, so hopefully you guys, when I said TP, when you're approaching these kind of levels, which is pretty much a TP, and I said stop and trail, I'll run you through, guys, what I mean. So we are going to talk about now about trailing your stop losses. At TP1, what happens is usually we have levels, and I'm just going to say we usually do 1-to-1 for TP1. So we call this as a take profit. We're just going to highlight it. This was TP1. Great. Okay, so market moves, and we'll do it on lower time frame, so it's easier to see for you guys. So market is moving down. We are in a trade. We enter the trade, and what happens is we hit a level, and we say TP1. Usually at TP1, I like to do two things. Take, depending on the move, if it's on a lower time frame, higher time frame, or whatnot, anywhere between 25 to 35, 40% on the position. You have to understand that depending on what type of trade it is, if it's a swing versus a scalp, our job as trader is to take money from the market whenever money is given to us. Okay, and expecting from yourself and from the market full TPs every single time is just unrealistic. We're not here to catch 1 to 10 risk to rewards every single time. Obviously, nice when it happens. Our job is to take as much as we can from the market. Okay, with that in mind, if we say this is a TP level, we take, say, I can't remember what I said in the chat, but it was like maybe 25% out. Great. And then the next thing I do is I cover my entry. What do I mean by cover my entry? I move my stop loss from up here into my entry level, meaning that if price does reverse, I don't lose money. And if price does go up, I get stopped out at break even, and I've taken some money out already of the market. So that's a winning trade. Okay, so this is what I mean by say covering the entry. It means moving your stop loss at break even. Price reverses, goes back down. That is great. We call another TP2, and just say we called it down here. This was another TP. So we've done TP1, we've done TP2. If I've taken out 25% here, okay, I'm going to take another 25% here. Or you can do 30%, or you can do 40%. It's up to you. You trade management, your size. I can't decide those things for you. I can tell you how I trade. Usually I do TP1, TP2, TP3, and by TP3, of course, I am pretty much fully out, like 95% out, and I usually leave maybe a 5% runner, meaning if price continues lower, great. I have a small runner, but this is TP2. So TP1 hit, move the stop loss at break even, so we are covered. TP2 hit, we take some more profit. Guess where the stop loss gets moved in next? Now, stop loss gets moved above the previous structural, in this case high, because we're going higher low, sorry, lower low, lower high, lower low, lower high. So I want to move my stop loss from a break even to the next high and so forth, right? So hopefully this makes sense. So I'll do a new drawing up here, just here. Say we are moving down, hit TP, we move down again. We've created a new high, a new lower high. We do TP2, we move back up again. So my stop loss goes from break even into the next high. And then guess what? We create another low and then I move that stop loss from here into the next high. Okay, so I'm basically trading, I'm moving my stop loss as price goes in my direction. You can do the opposite, obviously, for the way up. So once TP2 hit, and I said trail your stop loss, what I mean by that is you take this stop loss right here, and you move it, instead of here, you move it above the previous high, yeah? So in the previous high, you can see, was obviously right here, meaning I am covered. I am now covered, and if price, and I'll do a new drawing, if price gets here and taps me, that's fine. Price did not get there, meaning we have now another TP. And guess what? I put my next stop loss. Well, I put it here, and guess what happens? You get tapped out, and that's fine. You've got 1, 2, 3 TPs. So hopefully you've taken out 25, 50, 75% or thereabout of your position. And then price stops you out in profit. Okay, this is what I mean by trailing. Now, there are systems on different, I guess, brokers, or depending on sexes, dexes, whatever you use to trade, where you can automatically trade your stop. They automatically move your stop loss for you based on pips or percentages or numbers, whatever you want. I don't like to use those because they're so set. I like to manage my trade because I want to see where the structure gets created first, and I manually just move my stop loss there. Okay, so whereas if you do percentages, basically what you're telling, what the system is telling you, if price reverses, 1%, your stop loss basically just gets tapped. So I don't like those automatic stop loss trailing systems. I like a manual. I like to see where the high is, where the high is, where the high is, and I just move down accordingly. Okay, so Solana was a winning trade by all means. We've hit not 1, not 2, but 3 TPs, and we hopefully trailed, like I called in the chat. But for those of you who maybe had some questions about trailing, which I know there was a couple of you, this is what we mean by trailing. Now, am I going to, before I move on from trailing actually, am I going to trail my stop loss from a 1 minute structure? Absolutely not, because the lower the time frame, the more noise there is, right? So if I'm taking a trade off of and usually I share, by the way, I share the trade setup with the hour or minutes that I see the trade off. So this was a 1 hour trade. I think I took it from the 1 hour structure from memory. If I'm taking a 1 hour trade, I know it's roughly going to take, maybe a day, maybe a few hours. So the lowest I'll go will be probably 15 minutes, right? I'm not going to go any lower than 15 minutes because it's going to be too much noise. And conversely, if I take it on the daily, I'm not going to go any lower than an hour to understand where to trail, where the structure gets formed. Hopefully it makes sense. If not, just let me know in the comments or in Discord and I'll answer back. Cool. Let's have a look at XRP. XRP has gone on a bit of a run, of course. Is attempting to potentially break this structure here, but now we are likely going to see some retracement, in my opinion, back into this $1.87, $1.90 or thereabouts, which makes sense if we think that both Solana, Bitcoin, Ethereum, they're going to chop a bit. So this was a nice liquidity hunt, as XRP likes to do, and now we'll likely see the retracement down into this order blocks, series of order blocks right here. For Uniswap, it's a pair, and now we're going to talk about some of our alts that we've been looking at. So Uniswap had a nice 4-hour order block, which we talked about ages ago, a few weeks ago, I think it was, or maybe a couple of weeks, or maybe last week, I can't remember. Everything feels like ages when you're on holiday. This 4-hour block right here, and we are approaching that order block. So Uniswap is likely going to get called out very soon. But if you're watching this, basically the setup is from $5.29 with a stop loss, of course, relatively tight, just underneath the previous low. Mind you that with this volatility, we have a relatively tight stop loss just under here, but you do have also this low back here. So depending on how conservative your trading style is, you might want to lower your stop loss a little bit lower, or maybe have an entry 1, entry 2 type model. That's also totally acceptable. Okay, so where you basically split your entry, and you say, look, I want to do an entry 1 here, and I want to do a second entry just below that liquidity level out here. So that is definitely doable. You know, entry 1, entry 2, you can see there's also equal lows here. So there is a relatively strong chance that we will come back for that liquidity down there. That's Uniswap coming up, and ZEC or Zcash. Now, Zcash, we say back in, what was that? Let's have a look. November 10th. I said November 10th, we will see a retrace into two key areas, likely. One in 320 to 400, and the second between 130 to 200. And as it so happens, we have now obviously broken the trend line, which we have been building for the longest, and now we have, of course, started to break another trend line right here. You can see that. That's what happens. What happened right here, trend line broken, retest, is also happened right here. Okay, so people will say it's the news, it's the devs. Well, guess what? News is always the excuse. It's not the news, okay, that moves price. No, it's the excuse. The news is the excuse. With this price action now, am I buying? No, I am not. I want to see still a better area, 200-ish for portfolio anyway. Okay, so if you play leverage on Zcash, you could potentially see, you know, this was an area of interest, of course, because structurally we were at we hit one of my secret sauce fib levels, which is the 702. Just missed it. Where is it? There. And most importantly, we came into this last 4-hour order block. So I'm not going to do anything here on Zcash for leverage at the moment. I'm going to stay clear of alts, and we'll cover this with the next topic, which is going to be the Supreme Court may rule Friday on Trump's tariffs. Here's what at stake of the economy. Now, basically, what we're saying here is that the Supreme Court of the United States may will address two issues. Whether the administration can use provision under the Internal Emergency Economic Powers Act to level the tariffs, and if it is proper. If it isn't proper, the US will have to reimburse those importers who have already paid the duty. So what it's basically saying here is, if the United States or the Supreme Court of the United States deems that the tariffs that were brought forward by Donald Trump were improper, the United States of America will have to reimburse those importers. Now, this is not going to happen. Okay, this is, in my opinion, and look, nothing is certain, but this is very unlikely to happen in an election here. An election here where, you know, we've got Trump that obviously wants to look at its best. This is not going to go down well. This is not going to happen. But what could happen is that we could see a scenario where you can see here, Treasury Secretary Eskel said Thursday he expects a mishmash ruling. So we will likely see some sort of kick the can down the road scenario. We may see some sort of, we need some more clarification. So, and you can see prediction markets, Kalshi is pointing to just a 28% probability that the court will rule in favor of the tariffs as implemented, meaning there will likely be some changes. Yes, we all agree changes are probably necessary. Trump has gone pretty aggressive on tariffs, but the reality is that Trump has also been able to bring a whole lot of billions with a B thanks to these tariffs. So the chance, in my opinion, that this will see a full reversal near zero, in my personal opinion. Okay, what does that leave us for the markets? Well, if if we know that the news is the excuse, we just looked at here with Zcash, we also know that often things are already priced in. Okay, so we see candles on our charts, and we often don't understand why there is big spikes or big drops until the news comes in. So usually what happens is there's prices already in, then the news come out, then people do what? People chase. Okay, so this is usually how it goes. You go from one to the other, and then people chase the news. So this is how you get wrecked. What we need to do is forget about the news, forget about the chase, and just look at the price action. Charts are there to tell us everything we need. We already know at the dollar, this is why it's so important, but we always look at dollar first, BTC dominance first. We already know that we are approaching here a level of potential what? Do you remember? Start of the stream, I talked about it. Potential selling pressure right here, meaning that we may see some sort of reversal coming up real soon here on the dollar. But if that fails, and we continue higher, well, there is going to be another selling pressure level up here because fibs. Okay, so it's pretty simple. So we just basically delete that low to high fib, and we go high to low, and we just literally high to low. We will likely see another area of selling pressure around the 76 AA6. Okay. Now, Trump or Supreme Court is about to rule on Trump's whatever it is today, the tariffs. We may see some bearish news for the dollar, which means in return we might see some assets, risk on assets going up, because if the dollar goes down, risk on assets go up. What are the risk on assets? Gold, Bitcoin, stocks, etc., etc. What happens if we get some, hey, Supreme Court decides that nothing happens, okay? So it was all a big mishmash of nothing. Well, guess what? Dollar goes up, but we already seen it's been priced, and the move is already starting to happen, okay? These things don't just shot up 10% in one day. If basically the today's decision is a big nothing burger, we will likely see the dollar keep going up, and in return we might see some risk on assets going down, right? It's the reverse of what we just talked about. So don't fall for the news, okay? This is obviously important to understand that there's a lot of fear created by this news, where today is a big day and we might have to refund billions, of dollars. Tariffs brought in 195 billion, okay, and another 62 billion in 2026. So the chances that A, the United States Supreme Court, and B, Trump will let that be nullified are very, very little, okay? So don't pay too much attention to this kind of news. Pay attention in the sense that obviously we want to know what's happening worldwide, but don't just trade off that. Instead, what we trade off is divergences between pairs when it comes to Forex, which brings me to our next pair. We called, so I call this GU short trade idea based off a few things really. And I've got the full trading view idea posted as well for you to go and have a look at why. But what we see is, if we actually look at GBP and USD, let me just do this real quick with the GBP, and we do on this one, we do USD. So daily and daily, let's get rid of that, and we can see it was a bit of a divergence. So when I called it out, what's happening is we had obviously Euro USD already taken out this massive liquidity trend line and had already started to move down. Euro USD, of course, is leading pair here. GBPUSD, on the other hand, had the run up similar to Euro USD, but didn't take the liquidity trend line down yet. Okay, so there was a divergence, first of all. So the move had already well and truly happened, and you can see here we only have 4 candles. Here we have, I don't know how many more, double, triple more. So it was only a matter of time for GBPUSD to catch up on the leading pair Euro USD. That's called a divergence between pairs. Very important to understand when it comes to Forex. The other thing, of course, was on a daily, we had a divergence printing. And this is why I don't actually like indicators, because they always lag. You can see this one tells you whether it's a bullish divergence, bearish divergence, blah, blah, blah. This was a clear divergence that didn't even ping, but you can see we have high, higher high, high, lower high, divergence, divergence. Okay, so this is called a bearish divergence. When we have a bearish divergence, on a high time frame such as the daily, it's something that I do like. I do like to see it. I'm not going to go into bearish divergence at 15 minutes. It just makes zero sense for me. 1 hour, 4 hour, I don't even look at them. I look at daily, weekly, and higher time frame divergences. So a bearish divergence on a daily time frame at almost a 786 level. You can see low, high to low, almost a 786. Has my attention. And I said to you guys, GBPUSD is about to go on a big drop, on a major drop. I think I use ginormous as an adjective. And I gave you two entries. One was there, a current market price, and the second one higher. Second one higher did not get tapped, and we got a beautiful entry on our current market price. And you can see now we are printing, okay? We are printing, we're taking some profit off the table, of course. We've covered our entry. And this thing, depending on the news on the dollar that comes out today, we might actually see a much, much deeper drop, okay? So if we take low to high, of course, it wouldn't surprise me to see a drop all the way into the 50% into, you know, this kind of level, which will give us a 1 to 9, and potentially even deeper somewhere into this 4-hour order block down here around the 76, and that will give us a 1 to 15 swing. Okay, so this is how we catch those real big swings on pairs based off, excuse the frog in the background, that's my Bitcoin alert going off. This is how we catch those real nice risk to reward risk to reward setups from high time frame all the way down. Okay, so GBPUSD, I just wanted to quickly make you guys and girls understand the importance of divergences. Oil was also another trade where we took, I think it was this one here that I said buys on gold here. Of course, we on buys on oil here. And we went full to P, and this was another one that I took myself, but it doesn't really matter because I didn't call it out, but yeah, that's good. And let's take a look at some stocks. Stocks. Okay, so Moderna, obviously, beautiful entry we got there, right at the bottom, $24. We spiked all the way to 37, so almost 1.5, 1.6x. Nice little run. I'm not in any rush to take profit on this. You know, my targets are still somewhere in the 100. So it's probably another, 3x to go from here at the very least. So, but it's nice to see some movement. It's nice to see that we have finally broken out of this channel of consolidation. We have taken out liquidity, and now we just have to let price do its thing, creating structure and breaking even more high time frame structure. Target, this was a cracking intro we got, so glad. I hope you guys got in. I said basically anything between sub 90 to 80 was a buy. We had many opportunities. We're now sitting at over 100. Rivian doing what Rivian is meant to do. We talked about it back in November. They will likely come back here. We did. We went a little bit higher than anticipated, and now we'll likely see some sort of retracement. It's normal. So I'm not going to chase this stock now. The entry was down here at $11, and we will just let this play out as it is. There was also another stock that printed a cheeky 5-6x for us recently, and that was backed. If you remember, our entry was at $9. We went all the way to $50. So entry here, nice. Cheeky, what was that? 5-6x, yeah, or thereabouts. 5x, and now he has retraced down. Now I didn't call this one back out, and I'm not going to call it just yet because I do want to see how price reacts from here. But if if we get some sort of pullback into this gap around $11, this might be an opportunity to look out for, because we might see a bit of a bounce, not necessarily as big as this last move, but you can see the way stocks like this usually do work is you've got big spikes. Oops, sorry, wrong. Yeah, you got big spikes and then retracement, and then you get another spike and then another drop. So we might see another big move up, another 2 to 3x, which is not to be snubbed at or snuffed at in stocks. So keep an eye out for BK backed holdings again, and it won't actually hurt to put a settle alert there into this nice fair value gap, and yeah, just wait for price to come back in basically and do some sort of movement like that. Okay, Snapchat is also starting to finally maybe give us some moves. It's definitely attempting, and now we're obviously creating this liquidity. The good thing about Snapchat is we have taken out this or started to anyway to take out this nice level of liquidity. So all I want to see now is this. We are breaking out. Hopefully this is going to be, it's a long trade for me. This is an option trade that I took with expiry in 2027, so plenty of time still. But the last that I would like to speak about is, and this is a bit of a left field, I guess, play, is MSTR. So MSTR, we talked about it a couple of weeks ago. I said this is a level that I'm happy to initiate a position when it gets into the yellow box, and he did. We got into our yellow box at 150, and now we're starting to move. Okay, so 166, we're starting to move already. Can he go lower, and can he go and take some of this at 100? Yes, it can. So I'd said never full port. That was a lesson about never understanding that you have levels to enter a position. You got 150, 125, 100. So MSTR is definitely at a level now that is interesting to initiate a position. But we also have MSDX, which is a 2x leverage position on MSTR, and it's an ETF. Okay, so you don't actually own any of the MSTR, but what you're basically betting on is that MSTR price action goes up. Okay, so this is another way for us to play the MSTR. This is obviously at a much more affordable price. You can see we have $4.57 versus 166 for MSTR. It is an ETF. It is a 2x leverage position. But the risk to reward, if we think that MSTR can go up from this level, well, the risk to reward here is definitely an asymmetric bet that is worth considering. Okay, so if this thing goes up to, say, for example, $20, well, you just 5x your money. Okay, can MSTR go up 5x from here, from 100? Can it go back up to, what is that, 150? He would have to go back to 600, 700 to 5x and make all-time highs. So the chances of MSTX doing a 5x from down here versus MSTR doing a 5x from here are much, much higher. Okay, so I would say probably $100, $10 from MSTX is very conservative. You're looking at a 2.5x with a $20 as the next level TP profit being potentially very achievable. So 10 will be 130%, whereas 20 will be 300, so 4x, 332%. Very, very doable. So I'm going to be playing this asymmetric bet on MSTX. I'm not going to go huge on size because it is risky. What happens if MSTR or Bitcoin crash and everything goes down? MSTR will definitely come and clear this $100, which in return would obviously half at least MSTX stock. So don't go crazy on size if you do decide to play this. But it is something that I want to share for transparency. It's a great idea. Someone that I really respect in the space put me onto this, so I've done some digging, and I think it makes sense going small in size, if you do bet, the MSTR will reverse from here. You just have to be mindful that MSTR, sorry, I get confused all the time, can still go down another, 30%, 40% from here. So there's an up case and there's a lower case. Like anything, it's a risk to reward. The risk to reward for me on the upside here makes sense. So if it goes down $2, well, so be it. But if it goes up to 20, I've 4x my money. And with that, team, that takes us to the end of the stream. So jam-packed. We talked about a few things. We talked about trade management, and divergences and big fours and stocks. So thank you for sticking with me for this however long. I do apologize if this was not live on YouTube. YouTube is kicking me out for audio, so you guys weren't even able to listen to me, but this way we've got something up relatively soon and I'll just upload it straight away. So as always, guys and girls, thank you so much. I'll be back in Aussie land next week with my usual setup, and we'll resume as always. Thank you and God bless you.